Greetings. Thank you for joining us. This is Will with Perpetual Assets. Excited to have our friend back on the line, Mr. Jim Willie. He is the editor of the Hat Trick Letter, which is found on the website thegoldenjackass.com. Welcome, my good sir. How are you?
Doing okay. Another day, another dollar, another disaster, and another 3 really whacked out stories. There's so much going on. It's just incredible. The quickening of events it's just exciting.
Yeah, things are speeding up.
Like today, let me just mention a couple of quick stories that came out today. Mm-hmm. The Finland Parliament is discussing openly in a debate after a petition with 50-something thousand signatures was submitted. The Finland Parliament is discussing their exit from the European Union. Okay, that's one. Then Gazprom announced annual profits that were up 5-fold. So it looks like the sanctions against Russia, once again, didn't mean a twit. Then there's a news story about Venezuela importing 500,000 barrels of oil from the United States in a tanker recently. They're so strapped in cash, Will, that they don't have enough cash to buy high-quality Nigerian oil to mix with their heavy crude, thick Orinoco heavy crude in Venezuela, to mix it together to make it exportable. Mm-hmm. So the cash crunch in Venezuela is now limiting their ability to export their own low-quality oil.
Wow. Yeah.
A lot of things going on. It's just exciting. I wish there were better news to talk about from the U.S. perspective, but you know, when you adopt the Rubin doctrine of sell out tomorrow for another day of prosperity for Wall Street, mm-hmm. That's the Rubin doctrine. Yeah. Sell out the future of America to make sure that the profits look good for the next quarter in Wall Street. Yeah. If you do the Rubin doctrine for enough years, and then you adopt the fascist business model after 9/11 with an endorsement with the Patriot Act, you end up destroying the country. Mm-hmm. And I'm not speaking in silly exaggerations. They've destroyed the country. The too big to fail bank policy of rescues, they saved the banks at the expense of the economy. Mm-hmm. They wrecked the economy in order to keep the banks going. Mm-hmm. And now the banks are going to fall, and we're going to have a systemic failure of the country.
Yeah, and a massive concentration of wealth into the hands of the few who orchestrated the whole thing the whole time.
Yeah, that's part of the fascist business model mm-hmm. that I discuss. I mean, it's just incredible what's going on. You can't bail out the banks like they have. You can't print money to bail out the government like they have. You can't wage war to defend the dollar like they have and expect that 2016 and 17 are going to be normal. No, they're going to be breakdown years. Mm-hmm. We're in 5 years now of QE, which is African. Zimbabwe monetary policy of hyper-monetary inflation, unsterilized, which means they don't drain money out of the system in order to push money into the system to cover the federal debt. They just add more money in like Robert Mugabe did in Zimbabwe. When are we going to wake up, Will, that we're running an African-style policy for the dollar?
Well,
we're not going to wake up until the rest of the world rejects the dollar. And where will they reject it? In the shipping ports. Mm-hmm. That is the big battleground right now.
Interesting, Jim. So the Venezuela story is could be used as sort of a microcosm example, could it not? I mean, downward spiral there. They've depreciated the currency so bad they're out of cash, and their main export they can't even export because they have no money, because there's no liquidity.
Well, they're exporting rice and beans, and therefore they're having food shortages.
Uh-huh.
I have a phrase that when you have a severe currency crisis, you want to export everything you can. So they export anything that's not nailed down, and it causes shortages of what they exported.
Right.
And that, I think you call it a microcosm, and I think that's a very good word to use and an example. The United States could face that same situation where we export most of what is made in the United States in order to relieve the trade deficit, which is $500 billion a year.
Right.
If we have to come up with a new dollar for domestic only because we've lost the global currency reserve status, that's precisely the pressure that's going to have to be alleviated. You can't have a domestic only dollar without an immediate effect on it from the deficits. And it's $1 trillion annual federal deficit, which could, honestly, it could be filled and covered rather easily if they just confiscate all the 401 and all the IRA and all the KEO funds. That's about $1 trillion a year. So then they'd be left with the trade deficit, which is $45 billion a month, rather consistently, which is $500 billion a year, $500 billion. You cannot have a stable currency in that kind of deficit situation. And this is pressure that's coming, Will. It's coming like as certain as tomorrow's dawn. But I think the big story we were talking about before the recording is the silver breakout, which I featured in an article just a few days ago.
You did, yeah. Today is Friday, April 29th, and you had an article that came out this past Tuesday, the 26th, titled "Long-Awaited Gold Breakout." And you went into a couple different formations that silver, specifically silver, has shown. I think a daily and then a weekly, and with a price point anticipation of an $18 silver price breakout. And here we are today at just pennies, literally pennies under $18. What caused you to obviously write that article? This breakout in the metals is a substantial one. What we've witnessed here, I mean, silver's up, 15-20% here in the last 2 weeks?
Yeah, well, what motivated was the big move in gold in January. I noticed that gold was moving in every major currency except the dollar. So I concluded that, give it a couple months and you'll see the dollar version of gold, gold in dollars, make its breakout. But there are a lot of people who have been thinking, and I have been among them, that gold will make the big breakout and then silver will come along and just fly on through after gold breaks down the door. Think of it as breaking down the door like in a Robin Hood movie, attacking the French castle. Remember the most recent Russell Crowe movie? They break down the door and then just run through. Well, the ones running through are not the ones who broke down the door. Often there are a lot of dead bodies from those who broke down the door. But what we see now in the last month is a very clear silver breakout. Now, I'm not talking about a multi-year breakout. I'm talking about a breakout from the resistance levels that have prevailed for the last several months, maybe even a year. So, I remember back in, 2011 or late 2010, I can't remember exactly. I think it was 2011. Silver hit 50. We're not there yet. Don't worry about it. Don't worry about it. Really, the damage was done and the consolidation has taken place. But in the last month, we have a breakout. Take a look at the weekly silver chart, and you see a cup and handle, which means it dithers around the 16 level, dips down to 14, recovers up to the 16 resistance level, makes the right side handle dithering around before it has the gumption and the power to move above 16. But in the last 3 weeks, it did move above 16. Well, you take a look at the levels there. The resistance was 16 and it dipped down to 14. There's a 2-point potential. Add that to the 16 breakout, and you get 18 as a target. Okay, that's all very nice. It's all very clean. And it's all very reliable as a breakout pattern, a reversal breakout pattern. All right, now turn to the silver daily chart, and you've got a slightly upward bias rectangle, which means you've got an upper level and a low level, and it's just ranging between the two. But the two horizontal resistant points are not really flat. So there's an upward bias, but it's got a 2-point differential between the two parallel lines. Mm-hmm. Now, the fact that they're not horizontal is only more positive that they're upward tilted. And the 2 points add to the resistance level of 16. And there again, different pattern, same market in silver, different perspective, different pattern, and different, but the same target, 18. And here you said that we touched it in Kitco, but we haven't touched it in, well, what I look at is the bullion desk.
Bullion desk. It may have been kissed, and it's just, trading
came
right
back down
under
slightly.
It. Yeah.
Yeah, we got some resistance at 1830. And I think what we're going to see is a move up past 18 to about 1830, and then come back down to 17.5, and then when more of the system just breaks down and is more evident that things are not right and there's going to have to be a lot more infusion of money, we're going to see higher price. One of the most important points to keep in mind regarding the gold and silver market right now is that for the last maybe 10 or more years, we've seen a rather suppressed gold price and silver price, but we've seen an increase of between 5 and 10 times the number of dollars floating around. The Lehman fix has resulted in a tremendous increase in, for instance, the Federal Reserve balance sheet. They're sitting on $4.5 trillion worth of toxic bonds. Okay, so the point is we've had a 5 to 10 fold increase in money. And the clowns come out and say, oh gosh, you can't have gold backing all that. There's not enough gold. Well, sure there is. At $8,000 to $10,000 gold price, sure there is.
Jim,
if you increase by tenfold the number of dollars, you should have increased by tenfold the price of gold, but it was suppressed. So now it's catch-up time.
Jim,
that's what's coming. Well, that's what's coming. The Chinese have dictated to the U.S. that we will have a $10,000 gold price to back the new currencies.
Jim, before we go into Shanghai and basically how this metals breakout plays in, why it's important right now based on what's happening geopolitically and with Jim's work. Have you, this is a side piece, Jim, that we didn't discuss. Have you by chance been to the usdebtclock.org?
No, I mean, not lately. I've looked at it in the recent past, a couple months ago.
Somebody recently pointed this out to me, and I never noticed it before, but if you pull up usdebtclock.org and you look in the lower right-hand corner, it brings a dollar to silver ratio and it brings a dollar to gold ratio based on monetary creation, or at least based on the U.S. national debt. And Jim, I'm looking at it right now in the lower right-hand corner of usdebtclock.org. Dollar to silver ratio now $779 per ounce.
But what's the basis of the silver volume?
I believe it's based on the debt. So all of these different all these different numbers that are shown on here. Total debt per citizen, total debt per family.
I'm not talking about the dollar amount. Well, I'm talking about the silver amount. What's the basis of the silver volume to come up with that?
With that number, yeah, I don't know. They've got a number on gold as well, $7,022 per ounce. Dollar to gold ratio.
Well, it all sounds very nice and very optimistic, but until I see defined what the denominator is for the amount of silver, I kind of yawn.
Yeah, no, I mean, good point. But the fact that this is up here is interesting, and the number. Yeah. I mean, they fit perfectly with the numbers that you're mentioning, right? I mean, just based on monetary creation.
Yeah. Okay. Well, it's all very positive. What we need in order to get some equilibrium into the system is a breakdown of the COMEX, and where they go dark, where they get sued out of existence, where their operators are prosecuted for financial fraud.
Mm-hmm.
I mean, they're doing contracts in gold, but not delivering the gold. And I like to just make the joke. Suppose you buy a car, and now you've got everything all lined up for the payment. You want the keys so you could drive it away, and they say, "Oh, no, you can't have the keys, but you can buy another one."
That's a great point.
How absurd would that be? Or keys to the house. You can't occupy your house. Sorry. I know you bought it, or you've made a significant margin payment toward it, and you're prepared to pay the rest, but you cannot pick up the title or the keys to your house to live in it, but you can buy another.
You can buy more, or they'll settle you in cash, right?
Or they'll settle you in cash so that, thanks for your interest in this car or your interest in the house, but you can't have it. You can get your money back at the current value of the house. Mm-hmm. In other words, there's no gold market anymore in the United States. Mm-hmm. There's no silver market. And I love pointing out 3 factors in silver. It's called the live market. One is the live market. It's a super spot market where on an emergency basis, if you need to get your hands on $2 million worth of silver to satisfy a very large contract with multiple parties, and you don't care that you have to pay more because you need the silver, and you might pay a 20 or 40% premium on buying the silver. The live market has none anymore. No silver. That's one. The other one is that the more recent minted silver coins, like that are over 3 years old, they're getting an extra premium now. They're not priced the same as a 2016 or 15 minted silver coin. There's a premium, much like what you see in the collector's items, not as big as, say, a 80-year-old coin or a 120-year-old coin. So collector's premium on silver for nearby years has gone up. And the last one is that the recycle market is pretty much vanished for, say, silverware on a dining set. Mm-hmm. It's going straight to the refiners. There's no intermediate anymore. There's no discount for the intermediaries who would go to, say, the estate sales and lap it up and take their 10 or 15% profit. That whole industry is gone. We got some major changes coming. And it's exciting because I foresee sometime before this year is over that we could very likely see another move in silver like what we had 4 or 5 years ago. Mm-hmm. I think we're going to see a move real soon, like in the next month or two, over $20, capturing a lot of attention. Mm-hmm. And here's a new little twist to the silver market that's quite interesting. There's a lot of reports out there that J.P. Morgan is accumulating physical silver. Mm-hmm. And you can't really say, oh, gosh, it looks like they're becoming an honest broker. No, it looks like they're becoming Chinese brokers. Uh-huh. Remember that 2 years ago, J.P. Morgan lost its headquarters to Chinese conglomerate property owner. Mm-hmm. They lost ownership of their giant One Chase One Plaza, One Chase Plaza. Yeah. They lost their gold vault that's connected to the Federal Reserve. A lot of stories that maybe China owns a significant, if not controlling interest to the Federal Reserve now among all the partners. Wow. So China might have employed J.P. Morgan to replenish their silver stockpile, or at the same time interwoven with that, China might be forcing the United States government to use J.P. Morgan as the agent to replenish the silver from the lease that the United States government reneged on. We renege on every lease and every treaty for the last freaking century.
And this was specific to China, a silver lease with China?
Yes.
Wow. Well, that, Jim, in our community, I mean, those that have been aware of the silver, the physical silver mass that has been, amassed by J.P. Morgan here, Ted Butler's covered it pretty extensively. We've been pretty concerned. Hey, man, this is one of the most evil entities in the control of in the suppression of the metals prices. I remember our friend Blythe Masters over there. What's going on with this? And you think it may have to do with the Chinese, so it might even all be Chinese silver. It's not J.P. Morgan's, potentially.
Well, remember the 1999 most favored nation status given to China. Mm-hmm. Okay, that was sort of greasing the wheels and the skids for the transition of Hong Kong. Mm-hmm. Okay. Well, in 1999, there was reportedly also a rather large gold and silver lease. They call it the Mao Zedong, the Mao era gold hoard. I believe there was also a silver element to that. And it was leased to the United States. It was dumped on the market. It bought them another 5 years. Mm-hmm. And now we've reneged on it. We can't give back the leased silver when we sold it. Mm-hmm. That's how we keep the market down, keep suppressing gold and silver down. We keep either leasing or stealing. We've stolen the Germans and the Dutch and the Austrian gold. That's what the repatriation conflicts are all about. We stole the Ukrainian gold, 33 tons. That bought another month. We stole the Libyan gold. There are reports. I'm not saying it's true, but there are reports and forensic reports that the dead body is not Gaddafi. He has certain birthmarks, and I like to point out on the right side of my neck, I've got a big, it's not a wart, it's like we call it a beauty mark, but I got to be careful when I'm shaving on the right side of my neck at the base, because it's a big thing. It's like a half an inch in diameter, and it raised off. Okay, I got that. I got a mark, okay? Yeah. But I've also got a scar on my left knee from a knee surgery. Mm-hmm. Okay? That's how you would identify. Okay, there's a dead body. Is that Jim? Well, let's take a look. Do an x-ray of the left knee. Is there a titanium screw in there? This is how you identify a body. This is basic forensics 101. Mm-hmm. Apparently, it's not Gaddafi's body. So he's waiting in the weeds and the wings for the right moment to come forward and say, I want Libya's 144 tons of gold back. It's in the London banks, but he'll be told you can't have it back because we sold it into the market. But we got a new idea to start a war in Chad and steal their gold to give it back to you in Libya.
Oh, my God.
Okay, this is how absurd the U.S. gold management has become.
Unbelievable, Jim.
We got a new war that we got. It's a great idea. You'll love it. In 7 years, you can have your gold back. If you think this is absurd, it's not, because it's exactly what we told Germany.
And what about when Gaddafi says, well, yeah, but Chad is my trading partner. I buy oil from him, or whatever. I mean, the U.S. says, too bad. You want your gold, don't you?
Well, then they might say, well, don't worry. We got other opportunities. We might invade Angola. We're the exceptional nation. We can do anything. We can declare Angola loaded with terrorists.
Right.
Those who accuse of terrorism are the terrorists. Mm-hmm. The French have a wonderful phrase. I studied French in high school. I kicked my butt almost every day for choosing French in high school. Studied it 3 years. I actually got the French award in my junior year among maybe 150, 180 kids. The phrase is, il qui accuse s'accuse. He who accuses is accused himself.
Whoever smelt it, dealt it.
Yeah. So if someone goes running around saying, oh, he's a terrorist, that's your terrorist. Mm-hmm. If you have someone going around saying, oh, he's a thief, he's a fraudmeister, that's your fraudmeister. Okay, the U.S. is running around calling all these nations terrorists. Like, who are the recent terrorists? Well, you got Syria, they're loaded with terrorists. You got Iran as a nation of terrorists. Mm-hmm. You've got Yemen as a nation of terrorists. So these are all targets for attack by U.S. military and their allies, and usually it's to capture resources. I've been saying for over a year, the Yemen war is for Saudi Arabia to replenish their oil reserves. They're depleted. There are more stories coming out every month now about Yemen being loaded with oil and gas. So they're full of terrorists, and the Saudis are going to attack them.
Well, and
if that means bombing their hospitals and bombing their schools, well, okay, because that's where the new terrorists grow up from.
Yeah, and if there's no actual terrorists there, we'll just plant some there. We'll hire these mercenary groups, and we'll give ISIS some resources, and we'll just tell them to move there.
Well, I like to talk about correct forecasts, and I especially like to talk about unusual ones.
Mm-hmm.
The most unusual one I had was in 2011. I said, since there'll be no more justice among banker crime, we're going to see the bankers getting murdered.
Mm-hmm.
Okay. And that came about. Now you're seeing a lot of unusual stuff going on with respect to terrorism. But last August, when it became clear that a lot of the boat people from Syria were being dumped on Italian shores for points north, destinations north in Central Europe, I immediately started investigating. And a question that came to my mind, it wasn't from an article I read, it's just from curiosity and the way I think with a lot of critical questions. Who's paying for the passage for all these thousands of poor sots supposedly coming from Syria, and are they really coming from Syria? And the answer I got was the Soros NGO groups were paying for their passage. I included immediately that this was a dumping exercise with a motive. So I concluded in my August hat-trick letter that we're going to see some terrorism events in a major city of Western Europe, and we got it in September in Paris, France. This is how I put things together, in an unusual way. The terrorism there is not exactly a finance issue, unless you consider that the Rothschilds want to dump North Africans and Syrians all across Western Europe so that they can mix in a lot of hired terrorists. And I think that's exactly what's going on. Well, the point is wreck the European economy in a last step, because as you were saying, in some of the northern European areas, the women are not even going out after dark.
Right.
Because they're roaming gangs of Arabs that are raping and assaulting.
Yeah, there's like public warnings, in fact, in Germany and certain parts of the Netherlands, or I'm sorry, Scandinavia.
Yeah, Denmark, I hear, is on alert. And Sweden has numerous rape murders.
I talked to a guy from Finland a couple months ago, face to face, and he was almost in tears about it. He was that distraught about it.
And these are decisions made not by their parliaments, but by the elites.
Yeah.
And the United States is no different. United Parcel Service is shipping in plane loads of undocumented Syrians and North Africans into New Orleans right now. A UPS vice president objected to it, and he was fired.
Just another way our country is completely under attack right now.
Yeah, if I dump a lot of collected human feces into your living room, do you think it might have an effect on the way your household operates?
Well, not only does it have an effect on the operation of the household, Jim, it also has a pretty incredible dilutive effect. It draws attention. There's so much stuff going on that people should be paying attention to, and so we're going to create another catastrophe or terror event or something over here just to dilute the votes or what have you.
Yeah, I suppose, and in the United States, it's a little different. Obama likes shipping in Africans in order to collect new votes for the Democrats the next round. I mean, how many tens of thousands of Somalis, illegal Somalis, voted in Ohio for Obama? And for that matter, how many districts in Pennsylvania had 0 votes for Mitt Romney?
Yeah.
So, the voter fraud is just one more nail on the third world coffin for the United States. I actually could go on for an hour about statistical perspective of voter fraud and the whole election system, like Hillary buying poll results several months ago to make herself look good going into the primaries, Diebold software being rigged.
Yep.
Exit polls. Exit polls is one of the most statistical element stories that I could bring up about voter fraud, because you don't really see a lot of real high correlation in this world at the social level, and voting is kind of a social science. Well, there's usually a 90% correlation. This would be the last thing I say about voter fraud. There's around a 90%, 92, 89% correlation between, at the district level, the exit polls and the actual voting results. And that was not the case in oodles and oodles of Florida and Ohio districts in the last 2 elections.
Yeah.
That's your proof, because you could say, well, it should match with the probability of 90%. Rough. You could. It's not an exact interpretation, but for a heuristic, it's very good. Well, gosh, if you had so many that didn't match, what's the probability that each lack of match was a 1 in 10 probability? Well, you throw it out and say, well, you got 6 million to 1 possibility of something like that happening. Well, therefore, your hypothesis of an actual fair voting system is thrown out the window. That's called a hypothesis test in statistics, and that's what we do. So you got so many things that are just sickening with the fraud. And one of my favorite little items about the U.S., favorite stories to cite as demonstration of the breakdown of the U.S. toward a third world, is that in the year 2015, there were 1,600 cases where the police robbed people of their cash at the roadside.
Yeah.
1,600. And the claim is your extra cash, like you got $400 in cash in your attaché case in the back seat, we're going to take that. Under what grounds, officer? Under the Patriot Act.
Yeah.
That is suspicious money for narco trafficking.
Yeah. Jim, we have our clients have to consistently go open a bank account for this IRA LLC, this type of LLC. It's a business checking account, right? We transfer, we roll over their IRA, it buys an LLC, and then they can invest in different things. Well, they have to often, the last step is go open up a bank account for this company, for this limited liability company. And Jim, opening a bank account today is unbelievably difficult. The bankers are trained up, forwards, backwards, left, and right to believe that everyone is a money launderer or a terrorist. I've actually been through some of these anti-money laundering trainings. I've spoken with the trainers and the managers, and Jim, they are the most insane, brainwashed group of people. They believe that if you're starting an LLC, you're probably committing tax fraud and trying to, it's unfreaking believable. Like, it's unbelievable.
Well, it's not just the United States. I opened a bank account a year ago here, and there were about 7 forms. I said, what's all this for? You taking your instructions for applications straight from Washington? I said it in my best Spanish. And the guy just looked at me, 5-second pause, smiled, and said, yeah.
Yeah. The banking system is such a joke, and maybe that's a good caveat or a good segue, I should say, into the inevitable breakdown of the U.S. banking system. The energy sector, the losses in the energy sector that you've covered extensively, some of these massive write-downs that we should have seen here in March and April, have they just been papered over?
I think many of them have been disclosed and written down, but at the same time, many have not. Remember, the Dallas Fed had an informal meeting, and they were quite angry that the subject of the meeting was leaked out. And what happened was that the Dallas Fed told the banks of Texas and Oklahoma and Louisiana, don't exactly forgive the debt, but don't mark it to market yet, and work with the companies, because you have covenant violations and they're just late, they're in default.
Right.
But work with the companies to try to get some satisfaction through asset sales, and that didn't work either. They're not getting even 70, 60 cents on the dollar for the assets. By asset, I mean like a drilling rig or trucks or whatever. There's a surplus of that. So you're seeing lots of evidence of extreme measures being taken whereby the banking sector is just trying to buy time. And they're not seeing the oil price go back up. I mean, sure, it's gone back to 40. I don't know exactly what it is now, but I said back in the March report that it would come up toward 40 and go right back down. Maybe not down to test the lows, but go back down and find 40 to be a resistant wall. And that happened. I don't know what the oil price is right now. Can you bring that up quickly?
Yeah, I was looking this morning. I want to say it was in the mid 40s. Yeah, 45.58.
Okay, so it's gone back above 40 consistently. There are so many factors that right now could do a tremendous amount of damage to the banks in a final blow. You mentioned the energy sector, and that's very real, because the energy firms can no longer live off the oil hedges. The hedges have expired, and a hedge, for instance, a year ago would allow, let's just say Baker Hughes. A year ago, Baker Hughes would put on a hedge so that they could essentially benefit from a sale of oil, continued sale of oil, at maybe $90 or $85. Well, that hedge is gone. So they sold forward by means of oil futures contracts.
It's like an insurance contract, right?
Well, no, it's more than that. It's a contract they deliver on.
Right.
So if they weren't to deliver on it, yeah, they could benefit and buy back at a much lower price and enjoy a profit. But they deliver on it. So the big oil companies have hedges that are actually commercial and not bets. Okay? They deliver into them. Well, once those contracts expire and they're done with them, they go to a new round, and maybe they have others that they hedge where they were selling at 55 for a while.
Right.
But now they're going to have to deal with the reality of the market. Okay, the energy sector, it's not just that, it's gas too. The energy sector is a very big risk, and it's a present day risk. But there are other big risks to the banks right now, and I believe the interest rate derivatives and other derivatives, they're whacking the banks in ways that we just don't see. Their derivatives are bouncing around. Just think of waves hitting a dock. Okay, you've got some nice artwork or some pottery on the dock, and it's getting knocked over by some waves. That's kind of the damage that you're seeing from the derivatives. Just movement up and down, like with waves, is hitting the bank sector because they can't quite manage things like they used to. In December, this is a key point regarding the leverage and the risk from the waves damage. Just the simple oscillation in the markets. In December, there was supposedly an interest rate hike, and maybe there was. I thought for a while that there was not, because the effective Fed funds rate was only up 8 or 12 basis points when we were told it was a 25 basis hike. But now it looks like they did a rate hike. But what happened was they accelerated the reverse repo, which means the Fed took cash from the Wall Street banks and the major banks and gave them treasuries with a specific purpose: to use the treasuries as instruments to leverage up, way up. So the interest rate hike from December of last year was not so much to bring about normalcy in the monetary policy regarding interest rates. The rate hike was to force the banks to increase their leverage, force the banks to shed their cash, bring in more treasuries, lever up, and balance out the effect of all the artificial interest rate swap derivative demand for treasuries. There's almost no demand internationally for treasury bonds anymore. Yet there's ample demand within the market. It's coming from the derivatives. You're having China divest $250 billion in July, August, and September last year of treasury bonds. But the interest rate did not go up. Why is that? Because the interest rate swap machinery is producing artificial demand. Okay, the point that I'm bringing back to the banks here, I mean, got off to the tangent there, but for a reason. The big banks are now super leveraged with respect to the treasury bonds. So any oscillations, any volatility that you see in either the stock market or the bond market severely whacks the big banks because derivatives cannot handle movement. And the analogy I like to give is, imagine a Sears Tower. You can't talk about World Trade anymore because they demolished that. The Wall Street bankers demolished that, along with military and security agency assistant. They demolished the World Trade Center. If I were at the 120-story Sears building in Chicago, and suddenly it's 180 stories, and it's a little narrower. Why is it narrower? Because the big banks are even more leveraged with a smaller base of treasuries. Like the Sears Tower would be even more leveraged for its height by a narrower base and footprint. So if you have 180 stories as opposed to 120, and the Sears Tower is now with a smaller base, is it not more vulnerable to the winds? Okay, absolutely. The answer is obviously yes, and that's what's going on with the banking system. I believe that the banking system in 2008 and 9 went completely insolvent. And now I believe that primarily due to the energy sector losses and with increased losses through volatility, etc., with the derivatives, the big banks are facing illiquidity problems. At the same time, the Fed is coming in and saying, we're not going to be your last resort for bailing you out anymore. And it got confirmed in some recent FDIC reports directed at Goldman Sachs and JP Morgan. Since when does a U.S. government quasi-agency like FDIC issue a report to JP Morgan telling them that they're over-leveraged and cannot handle another financial crisis?
Right.
No. We're in a new chapter here. And I think the Chinese have told the U.S., get rid of your too-big-to-fail bank policy. Get rid of it. Let them squirm in the wind. So the Fed is saying, okay, they can squirm in the wind, but we're going to increase the leverage. In other words, we're going to reduce the base of the Sears Tower as it gets taller. Okay, this is all very dangerous stuff. And I think we're going to see a bank failure. And I think it's going to be an extension of Deutsche Bank action in Europe or JP Morgan action in the United States. I don't think any trigger is going to come from Canada. They're too much a tail on the U.S. dog.
It does appear to be a setup. I mean, a massive orchestration to let these banks implode.
Furthermore, we're about to get a repeat of the Lehman event. If you look at all the different metrics, all the different data summaries, you see we're at worse leverage, we're at worse debt, we're at worse insolvency, we're at lower economic activity, which means that we can support less debt through legitimate activity. Can't service the debt, smaller economic base. We're worse off than we were at Lehman in 2008. We haven't fixed anything. We had no attempt to fix anything. We've had obstacles for all reform. We've kept all the big banks going, and they're now even more casinos and even less commercial credit or investment banking in their function. We're moving toward, well, a systemic Lehman moment. They've spread around all their major derivative risk to several of the big banks so that if anyone is in trouble, they all kind of struggle and lean a bit into the wind and help out, say, Societe Generale in France. Mm-hmm. But now you got Wells Fargo announcing they've got multiple billions of energy loans that are suspect, and Wells Fargo has been violating the Fed's little, advice, suggestion. Mm-hmm. Wells Fargo is not going along with this movement of, don't mark to market, let's give them more time. Wells Fargo is saying, no, we got a big portfolio that's in trouble.
Interesting.
Yeah, well, Wells Fargo is probably the biggest of the, how should I call it? The banks that Chinese do business with.
Okay.
So if they're going to continue to do a lot of business with Wells Fargo, they might force it not to play along so much with the Fed and the crooked guys in New York.
Interesting.
Wells Fargo is unique. Wells Fargo has another uniqueness in that the Chinese have used Wells Fargo to deposit multiple billions of dollars in treasury bonds, and with that high quality collateral have borrowed tenfold against it.
Huh.
And with that, they're buying commercial properties all across the United States for multiple billions, and the U.S. government does not like it.
That's really interesting. They're using treasuries as collateral.
So you think that the Fed and maybe the Department of Treasury can come in and say, wait a minute, Wells Fargo, we don't want you to do that because you don't have adequate capital. Mm-hmm. Oh, no, they're treasury bonds. The collateral's just fine. But it's third world debt by any other measure. Mm-hmm. All right, we got a systemic Lehman moment coming, and I think we're going to see something this year.
Jim, do you think
if you have the ring of fire across the entire American hemisphere, going from all the way Chile through the Andes of Ecuador just had a giant earthquake. Mm-hmm. Mexico, San Andreas, all the way up through California. If you have the ring of fire doing earthquakes, I think you're going to have a dollar ring of fire with other earthquakes in the Western banking system, and I think it's going to come this year.
That's a good analogy. Do you think it's going to be one? You think we're going to see a headline? It's going to have one bank's name on it, or do you think it's going to have several?
I think initially it'll be one, and in the article for the announcement on the one bank, let's just say, for instance, HSBC goes down in London because of problems that are forced to the table regarding their gold market rigging, which has come out from the Deutsche Bank revelations. Right. Okay, HSBC has an announcement of a failure in progress, imminent, call for aid, etc. And in the third paragraph, it mentions 3 other banks that might fall within a few weeks.
Yeah.
Like a big Italian bank, like maybe Societe Generale of France.
Right.
Like RBS, Royal Bank of Scotland and England. Mm-hmm. Okay, those are 3. I mean, just what are the biggest bank in Italy in trouble? I think it's Monte Paschi. Okay, so Paschi in Italy, Societe Generale in France, RBS in England, bang, bang, bang. So it won't just be HSBC or whatever. HSBC is one of the most vulnerable right now. I'm hearing RBS is just days away from failure. So maybe it'll be RBS, and in the fallout, HSBC gets hit. Don't know. I don't know. The banks don't usually give us their executive summary reports on what to expect next month and what to work hard in overnight to fix, usually with some narcotics money. They don't give us those reports. Mm-hmm. We're left to just rely on our own sources and our own information, and I do the best I can, and I'm pretty fortunate. I remember, gosh, like it was yesterday, that I got an anonymous phone call from a fellow with a European accent, and it was The Voice. It was April of '08. And it kind of took me off balance for a while, Will. To be honest, I didn't know whether it was a death threat.
Yeah.
And it took 2 or 3 calls, each one half an hour, before I realized, no, this guy's on the good team. He's got a white hat on.
Right.
And he made me some offers that I couldn't refuse. Like, for instance, he said, I'll help supply you with some information that's very consistent with the analysis that you're already doing. He said, you're one of the 5 English-speaking analysts who actually see the destruction and the collapse and the catastrophe coming.
Right.
There aren't many of you around in the English-speaking world. And I said, oh, yeah, okay, fine, but what do you want? And he said, well, I want you to be a megaphone. Mm-hmm. I want to supply you with information that's valid, and you'll be a little early. And I'll give you some of my own forecasts, and you'll be criticized that they don't happen fast enough. They might take 2 years to happen. Like he told me in 2014, Germany's going to flip east. Mm-hmm. How's that working out? It's taking a long time, isn't it?
Yeah, it's in development for sure.
It's in development. He told me back in 2011 the petrodollar is going to die, the Saudi regime will fall. Mm-hmm. He said it's going to be a long, slow process, but you watch. So anyway, The Voice came on board, and I already had a small team. I didn't regard it as a team of colleagues. I just had this one fellow who was a mining expert and a petroleum expert. I had another fellow who was a friend of mine in the San Jose area, who was an engineer with a lot of good contacts, and he turned me on to a friend of his who was an ex-ComEx facilitator in Chicago. And then I invited Euroraj, who was a London banker. And then I invited London Paul, who was an ex-London banker. And now I've invited another fellow who's an inventor and an engineer, very smart fellow. So we bring in a lot of different opinions and perspectives. And Rob, I forgot, Rob Kirby was a friend of mine from way back. I knew Rob Kirby before The Voice was a friend of mine, contact of mine. So the team just grew, and now it's 10 or 11 people. We're all men, and it's not designed that way. It just turned out that way. And about half of them are Americans. So we have an interesting time. There's also in there the original group before The Voice, pre-Voice colleague is a fellow who's living in Latin America now, but he used to be a U.S.-based mortgage bond expert and underwriter. Mm-hmm. Brilliant fellow who he's a great news hound. I get up in the morning and Kevin's got 6 or 8 messages, and 2 or 3 are really interesting, and 1 or 2 are, on the sidelines interesting. So that's how I built the group, Will.
Yeah.
It started with good analysis and correct forecasts. The Voice came on, and then some others started just sending me things saying, what do you think about this? Mm-hmm. How does this fit in with some of your other perspectives and forecasts and analyses? And I said, well, you've been really helpful for the last year. Would you like to join our group?
Yeah,
I don't know. I guess so, yeah. What does that mean? Nothing. You just contribute.
Right.
And that's my colleague group.
I like that you've used the analogy of a switchboard before, in that not so much your group there, but the pings, whether it's from somebody like me or whether it's from a hat trick letter client who, in his or her specific industry sees something that is of interest to you. You get a lot of emails. You get a lot of information from the field, from us. I get some from clients and people out there. I can't imagine what your desk looks like. So that's a switchboard of information and of data for you to use and to draw from. And sometimes you forward some of that data over to people like me. And it's real interesting snippets.
Oh, the switchboard has been loaded with information. Mm-hmm. The switchboard includes clients, but it also includes what I call the followers. Mm-hmm. They're not paying clients, but they use contact us, send me an email, and after a while, they start just going directly to me and not using my contact us window. Mm-hmm. But let me just tell you three stories. Mm-hmm. I got a story back in 2006 or so from a woman, and she said, we just had a dinner with some of our old college women buddies. There are about 5 of us who like to get together. We keep in touch. And one of them, Susie, went off to the ladies' room and didn't come back quickly. So a couple of us went in to find out if she fell in or whatever, and we found her crying. Susie was an air traffic controller out of the Dulles Airport in Washington. And she just had to sign. They took a lot to get it out of her, but they told this client of mine, paying client of mine, told me that Susie got a visit that week from the CIA to sign a loyalty oath to the effect that she would not reveal that the U.S. Air Force shot down the Shanksville plane in Pennsylvania. They shot it down. It wasn't terrorists pulling down the pilot. And no. A wing part was found 5 miles from the crash site. Okay, that was one. Another woman in Hawaii told me a story that her father was part of Army intelligence before the Pearl Harbor attack and got wind of information that was passed on to the Japanese, inviting them to attack Pearl Harbor. And he was chased down, the father was chased down for 5 years in Hawaii until they finally just said, don't worry about it. It's all in the past now. And the key element regarding the Pearl Harbor attack, evidence perhaps that it was an invited attack by Roosevelt, was that the Japanese were told, do not hit the fuel depot. Since when do you attack a naval port and not hit the fuel depot? Well, could you explain that?
I could not. And that did in fact happen?
Yeah, they did not hit the fuel depot.
Yeah.
Okay, and one of the more recent ones that I got was a woman named Nikki. She always apologized in Italy for her less than perfect English, but she communicated just fine with me. She said, Jim, in Italy, there's a lot of talk in the newspapers and on the radio shows and among ourselves. These are not Syrians. They're from all over North Africa. They're black Moroccans. Mm-hmm. They're from Tunisia. They're from Libya. This is a major dumping exercise having nothing to do with the Syrian war. Mm-hmm.
Yeah, European media is not calling the people. They're not Syrians. They're calling them North Africans. I mean, the media in Europe.
The media is.
Yeah, I mean,
I didn't know that.
Yeah.
I thought they were calling them Syrian refugees.
Well, maybe there are some parts of the media that are.
They're also calling them African or Muslim refugees.
Yeah, like the warning.
At first, Will, they were Syrian refugees.
Sure, absolutely.
Okay, so I get a lot of sourced information from, I don't like to use the word plebeian in a negative way, but these common folks sending me stuff like today. Mm-hmm. I got in the contact us window that story about how the Venezuelans need to dilute their heavy Orinoco oil mm-hmm. with Nigerian oil, and they don't have the cash, so their exports are really way down. Okay, that came from a contact us. I mean, it was some guy in England I know it was England. He didn't really say it, but his email address had UK at the end. Mm-hmm. So that's England. Yep. I'm very grateful to the people who send me information. I encourage it. But, I also get some hate mail, and I would like to say that it does not get me down. The level of hate mail is down way over 90% compared to, say, 6 months ago.
Really?
Because it's looking like the dollar is having some major problems.
Yeah, I guess it's getting real. It's getting obvious on a grand scale for other for those that aren't really paying attention.
There's nothing like correct forecast to discourage hate mail.
Right.
Oh, Jim, you don't know anything. Your forecasts are all full of crap.
Please stay tuned for part 2. Check back in with us here at this same page, and part 2 will be listed shortly. Thanks for joining us.